That is a 20-year chart of gold. iGolder.com. 1994, around $400. You wait, what? 10 years later, $400. Then it took off. Went to 1,000 in what, 5 years? Then it had a retracement. It retraced from almost 1,000 down to around 700. So it went 600. So it went 600 up and it went down 300. So it had a 50% retracement. Now this move, it went from around 700 to 1,900. So that's a $1,200 jump, 1,200 point jump, and it has retraced back down from 1,900 down to 1,250. So that is what, from 1,900 to 1,250. That's a 650 point drop. So if you go from here to here, that is 56% retracement. The other day, Mr. Jim Rogers was saying that we could have him up to a 50% retracement. He gave it a 38% retracement. I don't know where he said 38% from where. I think it was the total price from 1,900 down here. But I'm not going from there. I'm going from the last bottom. From bottom to top, we've had a 56% retracement. If you go from here, from this bottom to this top, this was like a 50%. All right. This is another chart. This is Tom Keene's chart where it has inflation adjusted gold. This pretty much says that gold really hasn't went up that much. This is the old $38 per ounce. This happened in the 80s. According to this, we got a little higher than the 80s price and we plummeted down. So yeah, there we go. So we did take a big spike. I'm saying that I think this is a bottom in gold. That's what I'm saying. See here? Oh God, this is an ugly chart. This is just ugly. There's no way that if this was a chart for anything else but gold, for a stock or for any other commodity, I'd say go in and buy. That would just be crazy. This is just sick. Sick, sick, sick. Even though, you know, on your technical indicators, you've got a lower low here. You know, that is a divergence. It's a pretty big divergence actually, because this is higher. There's a divergence down here. See if it makes any difference if we go weekly. No, there's no divergence there. All right, BlackRock. Let's just give you a word of caution. I'd say if you're one of those gold buggers, yeah, but BlackRock says, here are 4 reasons why now's the wrong time to buy gold. Gold prices are facing a headwind of rising real adjusted for inflation interest rates for the first time in years. A stronger dollar isn't good for gold prices. The sentiment on gold has turned. Indian demand for gold seems to be declining. Oh, Jim Rogers mentioned that the other day. India's money supply growth, a leading indicator for the country's long-term inflation and a proxy for the country's gold demand, hasn't grown lately. Meanwhile, the fraction of total gold output held by the central banks around the world has continued to decrease over the last decade, and sharp reversal in this trend is likely. So there we go. Let's look at the dollar chart real quick. See what the US dollar is looking like, because they're saying those are, here we go. Wow, dollar strong. Looks like the opposite of gold. Let's look at it for 3 years. Yep, the dollar is strong. Yeah, but I think that, you know, just based on what Mr. Rogers said, I think we've had the 50% retracement. I think we've seen the bottom in gold. I'm calling it a bottom. But hey, you better be brave. I'm not running out and buying any. I'm just making a video. Peace out.